but we've seen the consumer continue to power America through this. And I think some context is really important around that. If we think back to the financial crisis and just what happened there, and then where we have got to today, it places what has happened in America in real context and why it has been one of the best, if not the best, performing developed market over that period of time. Why is that? Well, a lot about it is about job creation post the financial crisis. We've seen 21 million jobs created in the US. We've now got a record low unemployment rate at 3.6%, which we touched on in one of the podcasts earlier in the week. That's important. That's really driven the consumer forward, both in terms of retail sales growth, but more importantly, the repairing of the consumer balance sheet post the financial crisis, so they can spend, they can go out and drive the economy forward. I think the other thing that's important in that context is just about what has been delivered in the US in terms of GDP growth. If we think about where we've been over the past 10 years, we've seen average GDP growth of about 2%. Doesn't sound like a big number, but in a developed market context, it is good. It's been consistent. That's something that we haven't seen in other developed markets. So that plays into some of the themes then that we've been touching on and why the US has been so strong. It's the economic delivery. And yes, it's been lower than maybe Mr. Trump would have wanted. He set a target of 3%, but it's better than a lot of other developed markets. So that underlying growth story has continued to drive the US economy. And most importantly, from our perspective, what we've started to see post the trade war is an improvement in manufacturing sentiment. That supports an ongoing elongation, if you will, of the US recovery that we've seen over the past number of years, which is positive and really positive for markets.